won't stop till I hear him say,
my win rate right now is 94%. It has nothing to do with me being cocky or doing something in the market that I can't. It's literally just a step-by-step process, and I do not pull the trigger until all the ducks are in a line. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, in today's video breakdown, I'm going to do one of the deepest technical analysis dives that I've ever done on YouTube before for you all. This is a Zoom call that I had recorded with the CYPRX students, breaking down a Gbpjpy trade in extreme detail from this morning's chat. Make sure that you guys subscribe to the YouTube channel, like this video, give it a thumbs up if it does help you understand technical analysis a little bit better. Sit back, relax, and enjoy this video display. Okay, what is going on, everybody? Welcome to the video breakdown for today's trade, Gbpjpy. I have a very interesting breakdown for you guys, so pay close attention, because in order to place this trade, I utilize not only technical analysis, but I tracked fundamentals over the past 2.5 days. I've been tracking fundamentals for quite some time on Gbpjpy. I've mentioned to you guys for quite some time what moves the FX markets, right? We have political uncertainty or certainty in the market, and then we also have monetary policy, okay? Those are the two key drivers and key driving points for the FX markets. So over the past couple of Zoom calls that I've had with you guys explaining fundamentals to you all, what have we seen across the board? And that's what I'm going to start with today. For those of you guys who want a more in-depth analysis on fundamentals, remember, I'm not a financial advisor. This is just me piecing together news, fundamentals, and articles and things of that nature from having been involved in this market for the past 7 years. I've seen that what really drives the market is fundamentals surrounding political positions in, for example, Gbpjpy and the monetary stance, okay, for the Bank of England. Like, for example, we already knew that about 2 or 3 months ago, Boris Johnson was on the cusp of losing his job as the Prime Minister of England. That happened. And just recently, Liz Truss was voted in as the new Prime Minister of England. Okay. And so that's something that really drove price during this past London sessions price action. So I'm going to go over those fundamentals, how I was able to pick up on them using a free platform that I like to utilize. I've told you guys in the past that I've subscribed to Bloomberg, which is super expensive. It's literally like over $1,000 a month to get news in advance. It's not worth it. The news that the FX Street page and platform that I've given you guys is plenty enough to study fundamentals. Same with Daily FX or maybe even Investopedia.com. Those are all platforms that I've given you guys, if I'm not mistaken, in the beginner's material to go and read. Take it upon yourself to study fundamentals. I don't have a fundamental course in the CYPRX breakdown because I don't want to steer anybody in the wrong direction based off of what I've pieced together, off of what I think drives the market from a fundamental perspective. But in today's breakdown, I'm going to show you guys how I use that as a confluence in order to take buy scalp positions during New York session. Also based in confluence with the CYPRX confluences that we pay attention to. So thank you guys for tuning in. I hope that everybody had an amazing weekend. So to start with the trade breakdown, remember I've told you guys multiple times that what I think drives the market, okay, is obviously, of course, pandemic woes, war scenarios, things of the nature, fear and greed in the market, but also at the same time, the main key drivers for FX rates are monetary policy decisions, meaning are banking institutions hiking interest rates? Are they easing the economy, stimulating the economy, right? Pumping it with stimulus via quantitative easing, okay? And then also political uncertainty. So the first article that I want to pull up for you guys here that I was tracking on Gbpjpy came out, if I'm not mistaken, yesterday. So this was Sunday's article. I told you guys that in the evenings and in the mornings, I like to open up FX Street or Daily FX and just read a fundamental article to see if I can, piece anything together via something that can give me an edge or a sound idea on where the market potentially could be heading based off of my technical analysis that I teach you guys. And we see right here, this was just a simple, perfect setup where in the beginning of this article, it starts to kind of go fearful, right? Where it starts to make anybody that's reading this article a little bit fearful of buying. But if you have a sound technical analysis approach and you understand fundamentals, you'll actually see that this was a great article to read to be a potential buyer on Gbpjpy. So we read, Gbpjpy struggles to fill the gap around 161.00 with eyes on UK politics and energy crises. Okay. Some key highlights I have are fears over UK recession escalate amid fresh challenges to energy supplies. And then the Tory leadership result will be a crucial thing impacting the markets this week. Okay. And then so it says right here, even so, the mixed mood and concerns surrounding UK politics, as well as the energy crisis, exert downside pressure on the cross currency pair. So, 9 times out of 10, when these individuals on fxstreet.com pump fear into the market, or they say that the market's going to be bearish, there's always some type of quick sell off into discount, and then the market flips bullish. And that's just in my past experience. And you guys can see that right here. So they say that even so, the mixed mood, there still exerts some downside pressure. So I highlighted that because obviously, of course, we want to trade against what the general retail herd is doing. Well, the general retail herd reading these articles most likely would be like, oh my gosh, downside pressure, I'm going to sell, right? Well, wrong. Okay. So I'm going to show you guys that here today. A couple of other key highlights I have here are at-home chatters around the energy bill are the key implementation as Liz Truss and Rishi Sunak, I hope that I'm not pronouncing his name incorrect, probably, but both held their positions in their breaths for the Conservative Party leadership ahead of the results for publishing during late Monday. The Telegraph mentioned that Liz Truss is considering freezing energy bills for millions of households this winter if she wins the Conservative Party leadership race. It's worth noting that Liz Truss gained more acceptance amid her plans to help via energy bill, whereas the ex-chancellor Rishi Sunak has sound financial knowledge and is popular for the same to defend the economy. However, the latest concern is more prone to the energy crisis, and hence a victory of Liz Truss should be cheered by the GBP/JPY buyers. So this was extremely important because the ending of the sentence literally tells you, okay, that if Liz Truss wins, this should be cheered by the GBP/JPY buyers. So this is going to play an important role based off of why I bought during today's New York session. Okay. And then we also see, again, to solidify that FX rates are driven by monetary policy, it says right here, it should be noted that the Japan's second quarter gross domestic product, GDP, as well as the yields amid fears of more divergence between the monetary policies of the Bank of England and the Bank of Japan will be important. Will be an important release for the pairs trade to watch. So remember a couple months ago, I told you guys that the Bank of England is still hawkish, right? They're still tightening monetary policy and hiking interest rates, whereas the divergence that they're talking about here between the Bank of England and the Bank of Japan is that the Bank of Japan, as we see throughout multiple fundamental articles, is still stimulating the economy. They're easing monetary policy. They're still pumping the market with stimulus. Okay, so just some supportive documents to support that claim here, just so that way you guys can see. And if you don't know, right, based off of some fundamental breakdowns that I've done in the past, you guys go look up the vocabulary. So that way, when you guys are reading these articles, you have a good grasp on the vocabulary. We can see right here, what does dovish mean? Okay, remember I said dovish is pretty much bad for the pair. Okay, so if the Bank of Japan is dovish, that means most likely we're going to see a decrease in value in the Japanese yen. Whereas if the Bank of England is hawkish, we're going to see an increase in value in the Great British Pound. Now, in between that scenario, we're definitely going to see some up and down price fluctuations where the banks are going to be buying from a discount and selling from a premium. But overall, okay, the Bank of Japan is still dovish or easing monetary policy, stimulating the economy because they have weak economic growth. Okay, they're increasing the balance sheet, they're loosening monetary policy, and they're cutting interest rates. Okay, so we see right here, just to highlight a couple of those key vocabularies, we see weak economic growth, inflation decreasing, increasing of the balance sheet, loosening of the monetary policy or easing monetary policy. Again, key vocabulary for you guys to pay attention to when you're reading these reports. Okay. And then we also see interest rate cuts. So if we go over here, remember easing, loosening, okay, increasing of the balance sheet, things of that nature, or stimulating the economy, we see those key vocabulary phrases in these articles. So we see Bank of Japan's Karuta to continue policy easing until wages prices rise in a stable and sustainable manner. Bank of Japan Governor Haruka Kuroda said that the central bank will likely continue with its accommodative policy in Japan. Look at this word right here, accommodative. That means that the banks are still having to support the economy, still stimulating the economy because of weak economic growth. Okay. And we see also right here a key phrase. They will continue monetary easing until wages and prices rise in a stable and sustainable manner. That's right here. Okay. So just to confirm, again, when you're reading these articles, you want to be piecing this together. It says right here, I highlighted it in purple. The divergence between the monetary policies of Bank of England and the Bank of Japan will be an important release. I told you guys a couple months ago that I'm not looking to sell GJ until this divergence flips, until the Bank of England becomes dovish and the Bank of Japan becomes hawkish. As you guys have seen, if you go on the charts and you look at the index for the Japanese yen, it is literally just tanked over the past couple of months. Okay. It's just dropped off the face of the earth. And this is because of the monetary policy stance that the Bank of Japan has been taking. So we see another article over here, again, just to confirm the thesis that the Bank of Japan is dovish right now. We see Bank of Japan's, I don't want to butcher that, Nakagawa, that's an interesting one, will decide the fate of remaining pandemic relief programs at September meeting. So guys and gals, this is something that we need to be paying attention to, because if this divergence flips and the Bank of Japan stops stimulating the economy and they start hiking interest rates and tightening monetary policy, we're most likely going to see an appreciation in value in the Japanese yen. And then if the Bank of England flips that divergence and goes dovish, what's going to happen? We might see a sell-off in Gbpjpy because the Bank of Japan, is done stimulating the economy. Again, we're going to be paying attention to that. It tells you right here in the September meeting. So this is something to be mindful of. I'm letting you guys know now. Watch towards the end of this month. We're going to be talking about this again. Okay, this is going to be a key driving factor for the price action that we're going to see for the month of September. Now, that's also not to say that price is already priced in. So just keep that in mind as well, is that sometimes these banking institutions, because they have all of this fundamental information ahead of time, it might already be priced into the market. Okay. So keep that in mind as well. But just to solidify that, we see Monetary Policy Board member Nakagawa said on Wednesday that the Bank of Japan will decide the fate of the remaining pandemic relief program at its September meeting. The Bank of Japan must continue monetary easing to achieve inflation targets in sustained and stable manners backed by positive economic cycles. So again, we see the key vocabulary that they're still easing and stimulating the economy. Okay. So those are two articles that I just wanted to share on top of that. Again, to support the bullish claim that I made today and the bullish decision that I made in the market surrounding technical analysis. The last article and fundamental I want to share with you guys, just to solidify, UK Liz Truss wins contest to become the next UK Prime Minister. So we saw in the previous article, right, that would be a bullish scenario that would cheer Gbpjpy buyers. Okay, so right here it says the latest concern is more prone to the energy crisis, and hence a victory of Liz Truss should be cheered by the Gbpjpy buyers. Okay, so now that you guys have my approach via fundamentals and everything that I was seeing in the market coming into this trading day, again, all of those articles came out prior to this New York session. We saw that bullish news come out. You guys can see my screen. All right, cool. So I did this analysis on the 15 and 10-minute chart. The 15-minute chart wasn't too clear for me via price action. So I told you guys in the past, if the 15-minute chart isn't clear enough for you guys via the right brain, left brain tracking, remember, left side of your charts, you want the higher time frame. So that way you don't get manipulated by the 1 minute to 5 minute price action. There's a lot of volatility and volume in the form of 1 minute candlesticks on a pair like GBP/JPY. Same thing with the cryptocurrency markets. If you're trading this strategy on crypto and you're looking at XRP, you might get manipulated thinking that the market is bearish because of temporary sell pressure on the 1 minute chart. But then on the higher time frame, you see when the market flips bullish, just like how people, I believe, not to call anybody out, but there was a couple people selling the market this morning in the Gbpjpy chat. And I came in with a message and I said to you guys roughly at around, let me just pull up the screenshot for you guys real fast, just to show you guys that I do like to give you all my analysis ahead of time. There were some people that were asking about sells, potential setups in the GBPJPY chat. And I came in this morning at 5:18 a.m. Okay, so that's roughly right here in price action. If you look at and pay attention at where I send my analysis at, it's always ahead of time. So 5:18 a.m. was right here. Okay, right here in these two candlesticks. And I said to you guys, if price flips bullish, my immediate targets will be 161,900 and 162.00. But I'm waiting to see if we can get a better discount from London bullish runs. Till then, I'm waiting. I just hate selling GJ. That's what I said to you guys right here, these two bearish candlesticks. So now to give you guys my technical analysis and what I was looking at, okay? First, we're going to start with the advanced tracking methodology. So I just told you guys I did this on the 10-minute chart because the 15-minute chart price action wasn't clear enough for me personally. As you guys can see, there is no real clear, high or low right here that I could see, or even here. So I went ahead and I dropped down to the 10-minute chart. Remember, when we're doing our advanced tracking, what we're looking for to start either tracking Asia or London session lows is a potential area where the banking institutions, if the market is going to continue bullish, we already know that the banking institutions during New York are not going to buy from a high. Okay, so they're not going to buy all the way up here or all the way here when price got passed to them at a high. They're most likely going to manipulate price down into lows to give themselves discount from where either Asia bought from or London bought from. As traders, we're never going to know where that area is going to be at. Our job as traders is to give ourselves the best risk to reward and to be able to react to those specific target areas when that price action comes into fruition, and being able to identify those areas. So how do we identify those areas, guys and gals? Let's first pay attention to London session, okay? And what happened prior to London session. As you guys can see, you always want to identify what the market is telling you. Well, here, when the market gaps down in price, it is literally telling you that it wants to move down. You guys can see from the weekend, we gapped down. So it gapped down and made a new market structure high. So here is a daily open, okay? And then the market makes a new daily high. After that, what does it do? It creates a liquidity trap in the market. So here's a double bottom, or where retail money would be involved. People were buying this dip to close the gap. I even said to you guys, I screenshotted, somebody asked me, I believe it was Zach, if I'm not mistaken. He said, what is a gap in the market? This is simply just price action that us as retail traders can't see that takes place over the weekend. Remember, the markets, the FX markets don't actually close. It's just that we don't have access to them over the weekend. Banking institutions still have to move price over the weekend. And so this is that facilitation of that price action. Well, retail traders were definitely buying in the form of this supportive region right here. Okay, so we already see the market move down and move back up once. Then we come into this London session, those bullish fundamentals start to develop here in this area. Okay, remember all those fundamentals I just read to you, they came out roughly at around 11 p.m. Pacific Standard Time, GMT time, that's about 7 a.m. So about 7 a.m., all of those bullish fundamentals came out, and you can clearly see what the market participants, i.e. the elites, were doing. They were setting up trend line liquidity above highs. So again, just to solidify, retail methodologies do not work, okay? Do not trade gaps, right? Do not trade retail supportive methodology regions, and do not trade trend lines. Why? Because these are all target areas for the banking institutions to take their orders from. The banking institutions dip beneath a low, and then they send price higher, breaking previous market structure. Then we come into London session, guys and gals, and I teach you guys to track the candlestick bodies down to the wicks, the lowest point in price action. That's the first area where banking institutions during London buy from. And as you guys can see, the markets push price down and then they buy price, breaking previous market structure. So they break one market structure high here and another market structure high here. So this was the first area that I highlighted and extended over to the right-hand side as a potential area where the banking institutions during New York, if they're going to seek to take buys from a discount, will push price down into to buy from. Okay, so that was my first area. And as you guys can see, all I'm doing is identifying what the market is telling me. And the market is consistently telling us that it wants to set liquidity traps beneath lows and above highs, make a run on those lows, and send price higher. We also have psychological levels down here in this area that we could track. We have the 600 psychological level that the market failed to break below. We also have the psychological level 700 that the market failed to break below. Okay. So again, you guys just make sure that you pay attention to what I teach you guys in the advanced section. Okay. Tracking psychological levels, which is that what? If this was valid bearish pressure, like literally just ask yourself logic. Look at this. If this was valid bearish pressure, okay, and this market was going to continue lower, it would number one need to break the psychological level, which it failed to do. Okay. But immediately after it tapped into the psychological level, can somebody please tell me what happened? Immediately after that, what is this? What is this pattern that I teach you guys?
Match of
Match of
bullish
momentum. Good job, Emiliano, right? So we have a bearish move down into a psych level and an immediate match of bullish momentum. This is an indication that the banking institutions have no interest in pushing price lower, and instead their interest was on grabbing liquidity beneath lows to liquidate retail traders and then to take buy positions based off of their stop losses, okay, to then come and target people who are selling in the form of over leveraged retail trend line traders. Okay, you guys catch my drift, right? Again, so everything I'm teaching you in the market is literally to trade in tandem with the banking institutions. Okay, so now we have one area of interest predefined in the market that we could trade during New York session because we're New York session traders. And then we come over here. Remember, we're looking for a market structure low that leads to a break in market structure, the first lowest point where London session buys from. This was the first one. Then we get structure, a high, a higher low that leads to another injection of liquidity into the market that breaks two market structure highs, one here and one here. So now not only do we have bullish order flow because we're continuously breaking market structure highs and creating new higher lows, but now highlighting from the candlestick wicks, I'll go ahead and delete this, from the candlestick wicks down to the, or up to the body, however you want to say that, and extending that over to the right-hand side, you guys can now see how I had two well-defined areas when I sent you all that message at around 5:13 a.m. saying that I was waiting for a pullback to come into London session buy areas before I sought to buy price action. So some of you guys were selling price action here at these highs. Now, what's significant about this price action when New York session gets past it? That you could have determined that price was still bullish, okay? If you were selling this price action here, how could you have fought your emotions fractally? Because if we jump down to the 1 minute chart, this is definitely bearish price action. But the higher time frame is still doing what? It's creating what? Higher highs and higher lows. Higher highs and higher lows. It's still creating bullish order flow. So before you sell price action on GBPJPY or any currency pair that you're trading, you need to make sure that price action on the higher time frame shifts bearish. And the only thing that would have allowed you to assume that this market is bearish is if the first structure point, is if the second structure point that we identified where banking institutions during London bought from, where they created structure, was broken, retested in the form of a lower high formation, and then here, based off of psychological level rejections or fractal price action, could you have caught valid sell confluences? Okay, so if you were selling from a high up here, you were guessing a top because there was no break in structure on the higher time frame, i.e. the 10 or 15 minute, because we're scalpers and we're intraday traders. We're looking at these immediate structure points to be broken for shifts of momentum, and we never got that. Okay. Another thing that you could have utilized as a catalyst to trade against this sell pressure and be a buyer is what? What's something that I teach you in the form of utilizing our box tool? It's an orange box that I teach you guys in the CYPRX advanced course to utilize. Okay. The manipulation window, right? Okay, so for the sake of this video, because I might upload it to YouTube, I'm not going to go over specific times, but based off of the specific times that I give you guys in the market, you guys could have identified that this was manipulation. Why? Because we have early sellers above highs. We also have early buyers beneath lows. And what's coming into this market? Coming into this New York session, we have already identified that price is bullish, right? So guys and gals, this was literally a perfect trap for you to say, I'm going to wait, sit on my hands, wait till the market busts out of the manipulation window, And then I'm going to seek to be a buyer if price comes into discount from London session lows. Well, guys and gals, simply all I did to take this trade, okay, remember, now we're going to get into the piecing all the confluences together. So we have the fundamentals, we have the 15-minute and 10-minute structure, we have the manipulation window as a confluence. Now we have logical take profit areas. Even in my screenshot that I sent you guys, I said that I was targeting sellers above highs from New York session early sellers. And that's going to be in these two areas, which again comes into fruition with trend line traders. Okay. Same thing. Look at this. Look at this. Like, you guys cannot make this up. Okay. Look at this trap right here where we see equal lows. Okay. We see equal lows, one low here, one low here, and then retail liquidity above highs in the form of a triple touch of a trend line. Well, look at this, guys and gals. You think I'm making this up? Here's equal lows here, and here's a triple touch of a trend line. It's the same freaking pattern. It's literally the same pattern, just on a bigger scale. Okay. So fractally, the banking institutions were literally doing the same exact trading setup here, which is something that I try to teach you guys to identify and trade against. So I waited for these equal lows right here to be taken out on the lower time frame. Okay. Now, to get the higher time frame Fibonacci in tandem with the lower time frame, simply all I did was the first area I took my fib from was this low that we identified during London session, taking it to the high and extending it over. And that was my higher time frame confluence solidification right there. After I got this, you guys know that I like to just highlight this area. So I'll take from out of the manipulation window just to make sure that I'm not trading in it, down to the 100% discount. And I'll make this like yellow or something like that, right? It doesn't really matter, whatever color you want it to be. We'll make it psych level, we'll make it yellow, and then we'll go ahead and delete our Fibonacci. So now we have an area that we know is discounted based off of higher time frame. We have an area that we know is discounted based off of where London session bought from. We have pre-engineered lows in the market, so we're waiting to see if those lows get violated. We also have reason to believe that the market could push price higher because we have early sellers in the market. We also have bullish fundamentals coming out for Gbpjpy. Okay, so these are all reasons to continue buying price action or continue bullish order flow. So now we're going to jump down to the 1-minute chart and go into the entry criteria. Okay, so now you guys see how all of my confluences are coming into fruition. Now you guys can see how price on the lower time frame, now we're on the 1-minute chart, surrounding all of my technical analysis so far. Here are those lows right here during the manipulation window. Here are the highs that we're going to be targeting for our take profit. Here's the yellow box that I had highlighted. And now what do I tell you guys to identify inside the yellow box? We're looking for a low set in the market. We're looking for pre-engineered liquidity to the upside in the form of a trend line. Okay. Then we're looking for that low to get violated. Then we're looking for a match of momentum or a break in market structure. It doesn't matter which one, whether it's a match of momentum that leads to a higher low or a break in market structure that leads to a higher low. We're looking for a rejection of a psychological level after the market sweeps liquidity. And then we're looking for that shift of momentum. After that shift of momentum, somewhere over to the right-hand side, the market will print. Most likely, again, we're looking for a higher time frame confluence to give us an edge in the market based off of lower time frame confluences. The market will print a higher low for you to enter in on, whether that's here, whether that's here. You know, it doesn't matter what you're looking for. Now that we have these confluences, we're looking for a higher low after the match of momentum over to the right-hand side. And guys and gals, would you look at this? Okay. If you pay attention to the screenshot that I sent you, I entered right here at this higher low. So fractally, let's pay attention. Here's the lows that get violated. Here's the bearish momentum. Here's the psychological level. We rejected the 400 level. So we failed to break into the 400. There it is right there. There's the match of momentum. Okay. It leads to a break in structure fractally. Here's your higher low, higher high formation. Then all I did was I took my Fibonacci from this low to the high to get that fractal sniper entry, low to high. And boom, you guys can see the screenshot that I sent you in the group chat. Here was my entry. I even had target areas. I told you guys above sellers. Everybody else was selling GJ and asking me why I'm a buyer, why I'm a predominant buyer. And this is why, guys and gals. Okay. This is why. Because when you can do proper technical analysis in tandem with fundamental analysis, in tandem with higher time frame analysis, you become lethal in this market. My win rate right now is 94%. I told you guys it was 97%, but like last week I lost a trade, so it messed it up a little bit. But 9 times out of 10, when I place a trade, I win a trade. It has nothing to do with me being cocky or you know, doing something in the market that I can't. It's literally just a step-by-step process, and I do not pull the trigger until all the ducks are in a line. Okay. You guys can see how much patience I had to have to take this trade. Let's start from London or from New York session start. When I started monitoring price action at about 5 a.m., this trade took me about 1 hour and 3 minutes to be patient and wait for the confluences to play out. Okay. So many people that were trading inside this manipulation window were seeing sells. And if I clear up all the higher time frame bullish confluences, look, I mean, this does indeed look like fractal sell pressure, right? Because here you could have seen that this is maybe a break in structure, sweep of liquidity above highs right here, right? Shift the momentum. Okay. A pullback, you could have been taking your fib from the high to the low and trying to get a premium sell, which is what I'm pretty sure some of you guys were doing this morning. And if you're selling from this area, immediately what you should be asking yourself is, am I trading against the higher time frame? And the answer is yes, because none of this fractal sell pressure right here, guys and gals, broke the what? The higher time frame lows that we needed to see broken before we can see bearish shifts in momentum on the higher time frame. So what we would have needed to see, and this is why people will sell tops and get liquidated, like anybody that was selling this morning did, unless they moved their stops to break even and pulled profit, is they're not being patient enough to wait for the market to break higher time frame structure bearish because they think they're going to miss out on a move. Well, guys and gals, 9 times out of 10, if the market is going to sell off on the higher time frame, it'll break this higher time frame structure, and then it will retrace and it will continue market structure down. This is the only solidification that would have given you the confluences to sell. As you guys can see, as of right now, okay, the market is still printing bullish order flow. We're still sweeping lows and creating new highs. Okay. So I hope that this trade breakdown helped you guys out. This is like literally a fully diluted breakdown, everything from start to finish that I was analyzing coming into this market. Okay. Think about everything that I just taught you guys. Ladies and gentlemen, I hope that you all enjoyed that technical analysis display along with the fundamental breakdown. And make sure that before you all head off of this YouTube channel, you give this video a thumbs up. It does help boost the YouTube algorithm out, and we do appreciate it here at CYPRX. As always, be cognizant, be aware, and I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say